ULTY or ULTY is becoming one of the most popular high-yielding ETFs on the market today, rivaling that of MSTY and offering a sky-high yield of well over 80% while paying you income weekly. And in this video, we're going to get into all the details about ULTY and its insane yield and where it stands today to help you decide if it's an ETF for you to look into or not. So what is ULTY about? ULTY is an actively managed ETF that seeks to generate weekly income from a portfolio of stocks via covered call strategies. So covered call strategies are being implemented on each of the individual holdings that make up ULTY's portfolio. And investing in ULTY involves a high degree of risk. So while this fund has a variety of holdings compared to other YieldMax funds like MSTY that are single stock focused, that doesn't change the fact that ULTY is still a risky asset. Now, due to ULTY's investment strategy, ULTY's indirect exposure to gains, if any, of the share price returns of the underlying securities is capped. This means selling or writing call options is going to limit your upside potential, unlike if you're holding the underlying stock. ULTY is also subject to all potential losses if the shares of the underlying securities decrease in value, which may not be offset by income received by ULTY. So if the underlying stocks drop heavily, for whatever reason, ULTY can also experience losses, which might not be offset by the income received. So here, I just want to touch on covered calls with ULTY a bit to help you understand how that income is generated. ULTY can generate that weekly income for you through a use of a variety of options and covered call strategies. And they do this primarily by applying these strategies on securities that they may own or to securities that they have a synthetic long exposure to, so they use a mix of traditional and synthetic covered calls. And synthetic covered calls are used to replicate the performance of the underlying asset without actually owning the shares. With ULTY, they do this by buying the underlying holdings call options, so a long call, and then selling the underlying holdings put options or a short put to replicate or simulate the price movements of the underlying holdings. The outcome here with covered calls is that you will have capped upside, so you forfeit potential appreciation for that income, and it can provide you with some high income from those option premiums. That's something to keep in mind if you're looking for the most appreciation and returns. So, getting into the objectives for ULTY. ULTY's primary investment objective is to seek current income, so this fund's primary purpose and function is to provide you with income. ULTY's secondary investment objective is to seek exposure to the share price returns of the underlying securities, subject to a limit on potential investment gains for each security. Like I talked about with covered calls, you can benefit from the growth in the underlying holdings, but it will be limited. So if you want to maximize on capital appreciation, ULTY is not going to be able to do it. Next is ULTY's investment sub-advisor will typically select between 15 and 30 underlying securities, mostly on the basis of volatility levels of the stocks, and will regularly review ULTY's portfolio to determine whether one or more of its covered call strategies should be increased, decreased, or eliminated, and if any strategy should be implemented on any new holdings. So the amount of holdings can fluctuate in that range, and that's because they're actively looking for volatile stocks, and selling option premiums against these volatile stocks allows them to generate that high income. At the same time, ULTY shows flexibility due to the fact that they're managing the holdings and option strategies, which can allow them to not only provide high income, but also income that's more consistent and stable over time. Next is the holdings of ULTY. Getting into the holdings of ULTY, remember that it can range between 15 to 30 holdings. And the top holdings that make up ULTY include names like Reddit, Upstart, you have MicroStrategy, Coinbase, AppLovin, and some others. These are some nice picks that they have here, which all these holdings experience a high level of volatility. And over the past year, some of these stocks have had some pretty nice upside. There aren't any holdings with too much exposure, which for the top 10, it almost looks evenly distributed. And for the remaining holdings, the percentage weights aren't too far off either, which I think ULTY has a nice diverse spread. Let's talk about the distributions and dividend history. Right now, ULTY has a distribution rate of 89%, which is really nice, and it's paying you weekly, so every week you'll be getting those distributions paid out. If we take a look at the most recent week, it was around 10 cents per share, and it's been like that the last couple of weeks at around 10 cents. And if you go back a few more weeks, you can see that it's slowly increased over time from hanging above or below around 9.5 cents, which is nice to see, but most importantly, the distributions seem to be pretty stable recently. If we zoom out and take a look at the payments over the past year, starting from the first half, you can see where ULTY was paying out monthly, and those distributions varied by quite a bit, while ultimately declining over time. But in mid-March, there were strategy adjustments, along with payments changing to weekly. Since then, ULTY's distributions have been pretty stable, which is a big plus, and hopefully it can maintain doing so forward, as the recent changes and consistent income has drawn a lot of people to shift into ULTY. Next, let's get into the performance of ULTY versus MSTY and other Yieldmax funds. As I mentioned before, ULTY went through some strategy changes in March of this year. For this reason, it won't help us too much taking a look at a chart over the past year of its performance. But if we close into these last 4 months, ULTY has provided a little over 30% in returns, including those dividends of course, which is real solid not only for the amount of time, but also since these changes have taken effect. And if we compare the last 4 months with MSTY and other Yieldmax funds like YMAX, YMAG, and TSLY, ULTY has managed to stay above the pack. And you can see the movements are definitely less drastic than something like MSTY or TSLY, which is to be expected from funds like ULTY that aren't focused on a single stock and have a variety of holdings. And just to show you the returns over the last year with all these holdings, while MSTY did fly high, ULTY still managed well compared to the others, with more of the time here being on the older strategy. Now, it's important to remember that when you're checking the returns of these funds like ULTY, be sure to always check the total returns, which are going to include any distributions and dividends. If you look at the returns of ULTY on Google, Robinhood, and other places, more than likely you're looking at the share price returns, which is not accounting for any of that income being paid out, which is going to be a huge chunk of what makes up those total returns. Next up is expense ratio. Now, I know some people might flip on this one, but these Yieldmax funds do come with higher fees than normal. ULTY has an expense ratio of 1.3%, which would be costing you $130 for every $10,000 invested. While this is high, you have to remember that this is an actively managed fund and that is paying out a high yield. Honestly, the expense ratio compared to the yield that you're getting is pretty minimal. And when you're taking a look at those total returns, it already has the expense ratio baked into it. Now, I want to talk about the benefits and drawbacks to ULTY. Starting with the benefits, the first thing on the list is diversification. It's nice that ULTY has a variety of holdings, making it less risky than single stock Yieldmax funds, which allows it to be more balanced. ULTY also holds the underlying assets rather than just having synthetic exposure. Another big benefit is that the holdings and strategies are actively managed and adjusted depending on volatility, which helps with providing that high yield. Next is the use of collars acts as a hedge and it helps to limit the downside. And last is that rather than getting monthly income like you did in the past, you'll be getting that income weekly. For the drawbacks, the first and most important one is that with these covered calls, you will be underperforming the underlying assets in the long term, trading that potential appreciation for income. Next is while this fund is more diversified than a MSTY, your potential for higher income is going to be less than those single stock funds as they have more potential for larger movements. There's also the risk that the income may not maintain its stability. These changes are relatively new, although they did occur a couple weeks before Liberation Day, where the fund did manage to hold up pretty well. But I think a true test of this fund would be when we face a longer downturn or a bear market. You're also depending on the management for ULTY's holdings, so any bad choices could lead to poor performance or losses. And of course, you can't forget that this fund is high risk. Yieldmax even states it themselves, and you're investing in a fund with a strategy that's dependent on volatility and volatile holdings, along with the fact that you're still vulnerable to downside risk. Those protective puts can help to limit the downside, but by no means does that mean that they prevent you from experiencing larger losses in a down market. So, is ULTY really worth it? Whether ULTY is worth it for you or not is going to be dependent on your investing style, your risk tolerance, and your desire for income. Yieldmax ETFs definitely carry risk, but that comes with the opportunity for some very rewarding yields. The new strategy and weekly payouts that ULTY now has is a game changer, along with the more stable income that has been providing. This is what I believe makes ULTY really stand out compared to some of the other Yieldmax products. Since we've been in a really green bull market as of recently, I'm really interested to see if ULTY can maintain this consistency over a longer time period, as well as during bumps in the market that I'm sure that we're going to face at some point in the future. And if you want to see some other high income paying ETFs, be sure to check out this video here on the best Yieldmax ETFs, or if you want to see some dividend ETFs with less risk but still some solid income, then be sure to check out this video here. Don't forget to like and subscribe, and I'll be catching you on the next one.